And I was
So they really gave you $10 million?
No, so that's the catch.
Okay.
And I literally Google how to start a hedge fund. And the same day that I signed my apartment lease was the day when I launched Hartmann Capital. I slept on the floor the day I launched my hedge fund.
A true founder, my friend, a true founder.
Every social medium has always been started by the younger generation. Like I was the first member of my family on Facebook. I was the first member of my family on Instagram. By now, my grandma's on both. There's a chance that you and I will be on Roblox in 10 years, maybe.
What are you excited about that we haven't talked about today that the audience might not even know exists in the world at this point?
Imagine having an AirPod that actually allows you to talk to your devices. Like most people talk to AI now. They talk to the wearables, like the smart glasses. The problem is a lot of us we don't want to talk out loud when we're in public settings. So being able to essentially use telepathy to talk to your devices.
I think that a lot of people in our industry, in venture, they never try the products that they invest in.
Yes.
Ladies and gentlemen, welcome to another episode of the Skin in the Game podcast. As you can tell, we are not in our typical studio, but we are in the HQ of a good friend of mine, Felix Hartmann's Hartmann Capital. Felix, how are you, sir?
What's up, brother? Thanks for being here.
Of course, thanks for having me. Maybe the best view in all of Miami is right outside of this podcast studio. Your place is amazing.
I love it. That's why it's been so hard to get rid of the lease. Every year, it's June. I'm like, one more year.
One more year. One more year. And you run the business out of this office, correct?
Yes. Yeah. So initially, during COVID, when it was so uncertain whether commercial real estate even exists, I just said hey, let's just get a unit, and I'm gonna have everybody come to me. Perfect. And so we worked out of here. I took one of the rooms, lived out of there, and everything else was converted to actual trading floors where we had desks with 2 screens and so forth. And then after COVID kind of ended and people started going remote again, I said I loved it too much, and I said, you know what, this is still great to have meetings, to have LPs over and whatnot. So and the podcast room.
Perfect.
And so we kept it.
You were able to push your employees as much as possible, right? Having them in your own place. It makes sense.
And the commute dropped to zero.
Yeah, literally. There's no expenses on that side.
And especially in that phase of my life, young, grind, single. I was literally waking up, I remember waking up 6 a.m. I would go to a fitness trainer at 7 a.m. and then just start working and then fall tired into bed at midnight and then rinse and repeat. And so a lot of times if you were to plot my steps, it would not leave this building.
It's amazing.
Yeah.
No, I really appreciate you having me today and so happy to do this. Do me a favor before we get into business. Let's hear about life. You have an amazing story. I've known you and your brother for give or take about a decade. And your story is just unbelievable. Coming over here from Germany, setting up not 1 but 2 businesses. Talk a little bit about yourself, how you came here, and your story.
Yeah, 100%. So it's funny in this context. First time somebody also knows my brother, since we live in the same world here with Florida. So 2008, I would say, is probably the good starting point. Huge financial crisis. And at this time, we were living in Germany. And so, the crisis hit different countries differently. Yeah. And so at the time, a euro was $1.60. And my brother was just in the age where, in Germany, you would do an exchange year. And so essentially, we had this conversation and decided, hey, why don't we go to America for 1 year, have the American dream for a year and get good at English. And then we would go back to Germany, right? But I guess the America bug kind of bit us. And after 1 year, we said, kind of like the lease, we're one more year,
One
right?
more year.
And so we kind of stuck around. And then after a bit, David got a scholarship for Pride Futures.
Yep.
So he was able to study in Florida. I got a scholarship for a great private school in Florida, American Heritage.
Amazing.
And so we were we can get this awesome education coming with an I-20 visa. And so why not do longer? And after a couple of years, we won the green card lottery. And then now we had the infinite kind of we can stay here as long as we really want to. We can work finally too. And that led to us kind of being in America permanently. One of the big turning points for me, how kind of David and I deviated, because we were so for those that don't know, my brother David Hartmann.
Older brother,
brother,
which was clarified earlier.
So he's a software developer. So he's just as geeky as me, but maybe even a little bit step geekier, right? Where he is big into developing apps, automation, AI, software, and so forth. And at some point, I deviated where I realized, okay, how can I utilize this skill set in a different way, right? Like we both believe in the future. He's building it. And I said, you know what? Investing for me might make the most sense.
Were you writing code at that time as well?
So fun if back then I did take coding classes.
Okay,
I didn't major in it, but like he did. But like already back in high school, I took like, AP computer science and so forth. And essentially, as I go into college, I started like trading, right? Because I realized, okay, I can buy these futuristic opportunities early. Like first stock I ever bought was Tesla, right? So I bought Tesla, but back in 2012, right? Like long before it was like before they sold many units. Before it was now, right? And so then I fell down like the trading rabbit hole, but it was always like frontier oriented, like buying the kind of companies we buy venture, because like as a 18-year-old you don't have access to venture, right?
Yeah.
And so then eventually this also led me down the rabbit hole of discovering crypto. And so David and I founded a company called fundus.com, where we do equity crowdfunding for startups. Because like essentially back in 2013, I think it was, where the Jobs Act passed.
Yes, which is, obviously a big part of our business.
Yes.
We started, the initial Florida Funder started in 2013 when Obama passed the Jobs Act.
Jobs Act, right. And so back then, it was brand new that like you can actually raise from the public to, with equity. And so we want to build this platform, fundus.com. And funny enough, like as we're building it, we had people from like Venezuela and Colombia reach out to us saying like, hey, we'd love to use your platform, but can we use this thing called Bitcoin, because we can't use our local currency? So like, Bitcoin, we've heard about it, but mostly like in like shady ways.
So this was 2013, 2014?
No, this is 15.
Okay,
15.
So still super early.
Still super early. Yeah. Bitcoin. When I was actually exchanging emails with Coinbase, Bitcoin might have been like $200, $400 in that range. But at the same time, I was trading my way like in equities, like through college essentially. Like I would sit in classroom, like 9:30 class starts, but also market opens.
Yeah,
and so
you're
I'm like,
looking at the market.
I'm looking at the market. My teacher's like, Felix, can you shut your laptop? It was like film appreciation class, and I'm like,
I don't know if I can actually.
Yeah, I don't know. I just opened this high leveraged options trade, as any 18-year-old would, And
that's so funny.
And so then, because I started looking at crypto, all of a sudden things started moving. Bitcoin would go from 200 to 400, 600, 700. Now we're like at the beginning of 2017.
And were you actively trading at this point?
No, so at this point,
just sort of watching, maybe buying a little bit?
Well, no, at this point we were building, right? Like we were building integrations with BitPay and Coinbase.
Got it.
But so then because I was doing that, I kept seeing the prices. I was like, what's going on here, right? Like, and the trader me woke up and said, look, these long-term breakouts, they only happen when there's actual fundamental reasons. Because like pump and dumps, they're pretty quick, right?
Yeah.
Like things go up and they go down. But like if for months and months and months something appreciates, there's probably something changing. And so funny enough, at that same time, I happened to read a bunch of books. One of them was 0 to 1 by Peter Thiel.
Yep.
And the more I looked into blockchain, the more I realized, wait a second, this is actually way bigger than just like some speculative asset. I like need to really dive in.
And just bigger than people trying to invest in your platform.
Right, of course.
I mean, you were understanding this was the new frontier.
100%. And so what that led to like was essentially these, I don't know, maybe even like by now I've obviously been tens of thousands of hours, but then like this 1,000-hour just deep dive where I would read anything available. And back then it was much less, like there was white papers and there was like, books by Andreas Antonopoulos and like his talks and, maybe some early innovators like Chris Bernice and whatnot. And I really quickly realized like, this is it. I need to like go all in. I would literally pull my college, like at 2 of my college friends, I pulled aside. I said like, we got to have dinner together. I sat them down. I was like, there's this thing.
Let me tell you
about blockchain. And I think it's going to be huge. And I think you should like go all in on it and focus on like, and when I said all in, not money, like even like you should, one was a developer, like you should build for this, right? Neither took me up on the idea, which
hindsight's 2020.
Hindsight's 2020.
Of course.
But, essentially, as the startup was kind of struggling itself, I said, you know what? Forget about the startup. Like, this is way, way, way bigger. I need to go all in on crypto. And then I expressed that idea in multiple ways. Number one, I cashed out my IRA, went all in on trading crypto. That did well. Then I started making content because I'd already been like showing my startup journey on Instagram, because Instagram stories were just like, essentially, it was a funny coincidence where I think Instagram stories came out right about the time when I broke up with my college girlfriend. And so all of a sudden I was like, well, I used to talk to this person all the time. Let me just talk to my stories all the time. And so I would like document my whole life I documented my life every day on Instagram stories, I think for maybe a period of like 6 years.
Wow.
Where I didn't miss a day. And so I actually built an audience on Instagram with like 55,000 people that know me weirdly intimately well, where they know me from like back in college to, LA.
They've been able to follow the life's journey.
The whole life journey,
it's
right?
Unbelievable.
And so then that led to multiple opportunities. But one day I wake up and I got a call from this merchant bank out of Canada that cold called me essentially and said, "Hey, we've been watching all your insights
Instagram
on blockchain."
stories?
Yeah, actually,
Yeah.
because one of their advisors who's on the younger side, like the marketing advisor, said like, "Oh, you got to talk to this guy. He's like an expert in crypto." And so they called me up and said, "Hey, we're looking to launch a security token, right? But we're looking for somebody that has expertise in tokenomics. Would you be able to work with us?" And at first I thought it was a scam. Has to be. Why is somebody calling me up?
This Canadian merchant
But
bank,
and
why
it's
they
like, if
calling
you're
you?
hesitant, like just look us up. You can Google us, and like both the company's called Forbes in Manhattan, and then the CEO Stan Barty has his own Wikipedia page. So I'm like, well, if the guy's a Wikipedia page, he must be like somewhat legit, And so then it's like, okay, so what would be next steps be? Like, could you come Tuesday? And it was like a Sunday. I'm like, oh, in 2 days. And like, where? Like, oh, LA. We're like, we'll fly you out. We'll put you up in a hotel. We'll take care of everything. And I go over there, and guy has like a house in the Hollywood Hills. He's neighbors with Leo DiCaprio and I think Keanu and whatnot. And it's just like wholly different world now all of a sudden from like, at this point, I'm 22 years old, and I just created cause of going from like FAU to like being on Hollywood Hills. I'm like, this is crazy, right? And I sat at dinner with the founder, and I showed him a Binance account. I showed him like how I scaled up. Like,
and did he have any idea about the crypto world at this point, or was this purely like
So-
the first step in education type work?
no, so context is like at this point we are in. This was January of 2018.
Okay.
And so obviously the
Yeah.
ICO mania was hot,
Yeah.
right? And so I think they looked at this and saying like, how can we capitalize
What
on
can
it,
we
right?
do
Like
with
this is
this?
obviously big.
Yep.
We gotta be on this train, right? As I think at that point, many were, not as many as today. Back then it was still poo-pooed by like banks and whatnot. But I think you had like Kodak launch coin and stuff like that and silly things. But essentially, I showed them my Binance account on at dinner, and they said like, hey, this is awesome. Why don't we give you like $10 million to start trading for us?
Wow. So that's how it all started.
Yeah. Now the funny thing is, like that evening, I was like, yeah, we can do that. Kept it cool, right? And then I go home, and I do like the happiest. Oh my god, And
It's amazing. I've worked my whole life for this.
And I'm like,
trading back in my college room
yeah.
to this. It's unbelievable.
So I'm like, holy shit. Okay, so how? And I literally Google how to start a hedge fund. This is pre-ChatGPT, so I had to ask like how to start a hedge fund. I found a couple blog posts, and legal structuring comes first, it seems. So I was like, okay, well, legal structuring, who does crypto law? And I was
so
like,
they really gave you $10 million.
no, so that's the catch.
Okay.
So the catch is like, I go because they just express verbal interest. We both know now that verbal interest doesn't mean shit.
No. Nothing matters till the check is cashed, my friend. We know that too well.
Yeah. But I was 22, so I was like, wait, hey, there's $10 million on the table. And even if they don't invest, there's others probably that are like institutional money is finally interested in crypto. So you got to figure this out because you're probably early. And so I I called up 3 lawyers. I liked one of them. And I sent them my incorporation check. I was like, okay, we're incorporating Hartmann Capital. So that's how Hartmann Capital was started, I think February 6th, February 8th of 2018. Right around the same time I got my first, I was also like, Boca is not going to scale me at that point. I need to go to the West Coast. And so I flew to LA just with bags, no plans, and then looked for apartments on, and the same day that I signed my apartment lease was the day when I launched Hartmann Capital.
Amazing.
And that day, because things just got so busy with the incorporation papers, I forgot to run to IKEA. So actually, I slept on the floor the day I launched my hedge fund.
A true founder, my friend, a true founder. So it's interesting because you were running a business in between some of this,
Yes.
the crowdfunding platform.
Yes, fund this.
When you look back at that, how much experience did you gain during that time that then you were able to port over to the new business running the hedge fund? Because it's obviously a much different type of company. It's an operating company compared to an investing company.
Yeah. I think materially more to the venture fund than the hedge fund.
Which we'll get to.
Which we'll get to. But it still it's super valuable. Like, hey, being like actually spending hundreds of hours on product, like, and understanding like, the kind of thought that goes into like designing every little piece to the user experience, whether that is the actual UI or whether it's the actual flows, like minimizing friction. To also, understanding the struggles of like, talking to customers, being able to understand the process of like actually raising from a VC to hiring a team, right? Like having to actually do every piece to the job, even though it's at an early stage, we only made it to like, let's call it seed stage. That's still
you gotta do
super
everything.
correct versus I've only read it in books, right? It's completely different. But I will also say, like, honestly, running an operating company, there are still overlaps. Like, I still have employees. I still need to recruit the best people. I still need to raise money. Like, the same way that startups need to raise money, like, we need to raise money too. And so, like, there's there's and also like if you want to build a great firm, like there also goes time into design. Like we spend a lot of time, like
on the brand, on the
brand.
marketing. I mean, the same type of stuff that you would build an operating company.
Yep.
The biggest thing from my past when I think about an operating company that I built compared to now building this venture fund at FLF for the last give or take decade is when you make a decision on an operating company, you immediately see the results.
Yep.
And you have to live with those results. Where in the investing world, the hedge fund world is obviously a bit different because it's liquid, it's quicker.
Yeah.
You don't see the results for years and years and years on the decisions that you make specifically around venture investing, which is very interesting. So it's sort of hard to, it's hard to validate that you're making the right decisions, and then ultimately a few years down the road, you're like, okay, well that was a good call, or not the best call.
For sure, I think there's just like a holistic way of like running KPIs. You can look at like, let's say for example, your network. You can see, well, are your followers going up? But also like, is the quality of rooms you're getting into getting better? And then sure, the quantity is going up, but also like, what's that leading to in LP conversions? And also like about the LPs, are they making verbal intros to other folks? Are they following up, right? Are they participating in SPVs? And when it comes to the actual investments, I'm still a fundamentals guy, and so maybe because I'm German, so like I see like, okay, maybe my marks haven't changed, right? But if one of my companies like 4x revenue in the last 12 months, they're probably worth more than they were when I first backed them.
Let me ask you this: when you look at portfolio now, if you have a company that 4x's revenue, do you mark that company up or do you keep it flat?
We still do last.
Yeah, that's what we do as well. All right, so let's go back to the hedge fund. What was the strategy of the hedge fund, and did you ever get the $10 million from the Canadian merchant?
Yeah. So incorporation was February. Conversation with them was January.
Okay.
So conversation was January. Incorporation was February.
Go to LA February.
Yeah. It took us 4 or 5 months to get everything running. From bank accounts back then for crypto was almost impossible because there's only Signature Bank and Silvergate Bank that would touch you. And they all wanted an auditor. But the funny thing is the auditors, they said, well, we'll only work with you if you only hold Bitcoin and you hold it with a custodian. So then you go to find a custodian. The custodians were like, well, we only work with you. That's where the only Bitcoin comes in. If you only hold Bitcoin, you hold with us and you can't trade it. So I'm like, okay, but that defeats the point of a whole fund, So there was all these hoops to jump through to finally come to like auditors, fund admins, And so we launched in June. And by the time June came around, Bitcoin had already crashed from 20K to 10K. And so that guy, the merchant bank, they got a cold feet and pretty much that just whole just like, yeah, I know, that was just was an idea, But the same thing happened also with the security token, right? So like they never launched it, right? They spent lots of money. Like that was my first really well-paying job, like they paid me 5 figures a month.
Wow.
Yeah. And so I was like, and so they cancel that, and so then I was like, well, I've just spent a good amount of money, like probably like $30,000, like incorporating this thing. I've signed annual contracts with all these service providers, and like I'm actually bullish crypto. Like I think this thing's going to work. So I'm like, we're still going to do it.
Let's make it happen.
And I launched with $217,000.
Was it your own money at this point?
Largely, we also had some LPs. Some LPs writing like 30K checks.
Got it. So you were taking at that point whatever you could get.
Yeah. I was like literally like some like a friend from high school that was accredited, or like somebody I met at a conference years ago that, again, was accredited, and they gave like 30K checks and like.
And just so the audience is aware, a hedge fund is essentially you trading on a strategy. Somebody will give you dollars as an LP, but there is liquidity in these funds, right?
Correct.
You can get out or redeem your position in these funds. What is quarterly? Is that?
For us, it was quarterly.
Yep.
So it's quarterly liquidity, 30-day notice. So like, it is, call it November 30th, and you're like, honestly, I want some cash out for December. In part or full, whatever you want, the percentage, cool, happens, right? And so it's a liquid book, which means money can come in, money can come out. NAV is struck every single month, so you know exactly how much the portfolio is worth. You get like a bank statement every month, right? And for us, the strategy was we were a long biased multi-strategy crypto fund. Okay. So what that means is, we were purely focused on digital assets, on crypto, right? We're only doing it for the liquid token market, so we weren't doing crypto venture investing. And long biased means like we are, let's call it 80% of the time, we believe the market's going to go up and we're going to focus on that. But we still have the ability to at least hedge a little bit, have some shorts if we believe they make sense, right? But we're not going to run a market neutral book. We're not going to be flat, right? And multi-strategy meaning we did all kinds of strategies, from like activist investing to special situations to long short to thematic trade, like all kinds of different approaches, because my thesis back then was, look, the crypto market is evolving so fast. any single strategy probably does not replicate well over these multiple years, because somebody launched, let's say, DeFi fund in 2020, which was DeFi summer, the prime year.
Perfect time.
Amazing time.
Year
But
later,
then afterwards,
not the case.
yeah, DeFi has just been flat and dead.
It's interesting. What was your best performing asset during those years running the hedge fund?
It's really funny. Terra Luna.
Really?
Yeah. So Terra Luna, it's funny.
There's a whole story behind Terra Luna, obviously.
Yeah. Oh, yeah. For those that don't know, so Terra Luna was one of the biggest. Let me start at the beginning. So in 2020, I found this asset called Terra Luna, which was essentially an algorithmic stablecoin where you're able to have, now stablecoin's a big topic, obviously now, you're right, but you
It
can
was
have
the original stablecoin, wasn't it?
No, there was like MakerDAO before that,
okay.
and a few others. But Terra Luna was able to get massive traction. So they said like, we've got 1.5 million users in South Korea using this on the Chive app, and people are actually using it. And the nice thing is, the more people use the stablecoin, the more the value of this asset called Luna goes up, because essentially it was like this flywheel where if there's a lot of demand for a stablecoin, obviously the stablecoin might go to 1.01, so you need to increase the amount of supply there is. The way you increase the supply is by reducing the supply of the counter asset, which is Luna. So naturally, if you believe that there's going to be lots of people using the stablecoins built on Luna like UST, then the supply of Luna is going to shrink, which means the value should go up, right? And so they had amazing traction. They built genuinely some of the most incredible products that haven't even rebuilt today, right? So for example, back in 2020, 2021, Luna already had a product called Mirror, where you were able to trade synthetic stocks on the blockchain. So you're able to trade synthetic Tesla, synthetic Nvidia, and so forth, stuff that hasn't happened until like now again on Hyperliquid, but there was like a 4-year period where you couldn't do what you could do 4 years ago on Terra Luna. And so I thought they were some of the most innovative guys in the space. And so the first time we bought was about at 20 cents. And then unfortunately I sold it like $1 or $2. Because then it kept running to 20. Then it crashed again to 4, and I loaded up the truck, bought lot at $4. And towards the end of the year, I had the chance to actually meet Do Kwon, the founder, and I was at some of the events, and I started getting MLM vibes. That was a red flag number 1. Red flag number 2 was the actual economics, where UST started being used predominantly for one single product. That product was Anchor Protocol, which was a savings account that paid you 20% interest, right? Now, the question that needs to be asked is like, okay, where's that interest coming from?
These yields were insane
Yeah.
during this time. I mean, it was 20 in a savings account.
Yeah, and so just to put some numbers on it, at the peak, I think there was, I don't want to mix them up. Luna was 40 billion. UST was, I think, $18 billion at the peak, which means 80% of that is $15, $16 billion sitting in the savings account at 20%. So then you start doing the math and asking, well, where's this money coming from? They're spending about $4 million a day on interest. And the reality was, this was just a reserve they had built up because they don't generate enough fees to make up for it. And so you could actually, the nice thing with the blockchain is you can check the balance. And so I saw in December that balance is about to be empty. And so what they did is they said, like, no problem. We just sold $1 billion of Terra Luna. And so we filled it back up. But I did the math and said, well, this thing is going to run out of money again by like come April. And so what are they going to do then? Like dump more in the bear market? Like it's just not going to work. And at the same time, in January, Mike Novogratz, famous guy for Galaxy, right? He got a massive Terra Luna tattoo.
Yep.
While at the same time, I found out through the back channels that like Galaxy was actually selling. And so then I was like, okay, I got all the red flags possible. And I sold our entire position. I even went on podcasts in this room where I said, like, that's probably one of our black swans. Like, Terra is an issue. And so we bought it we sold it 86 in a less than 1 year time frame.
Unbelievable.
So that made us like 6 million P&L, which at the time was still smaller. So
it's
yeah,
unbelievable. All right, let's fast forward to today, because what you're doing now is different than crypto. It's absolutely fascinating. Tell us about the new fund, the strategy. And then why did you get out of crypto and into these new assets that you're investing in?
So it actually picks up right where we were at this point. So at the end of 2021, right, like crypto had this thesis of the metaverse, right? And the more I looked into it.
So did Mark Zuckerberg.
That's right. So, but really cool story is that Fund 1 is called Hartmann Metaverse Ventures 1. And I incorporated this the week prior to Facebook rebranding. So I actually beamed to it and I saw the press release. I'm like, oh my God,
I was all over this.
I'm going to have the best capital raising period ever.
I'm the smartest guy in the world.
I was like, thank you.
Oh,
and
too good.
because it was like in October of 2021, right?
Yeah.
Because the more I studied it, the more I realized, honestly, all this crypto metaverse is full of smoke and mirrors. It's garbage. It's overvalued to the crazy level where Axie Infinity, a point-and-click 2D game, was worth $50 billion. But then I was like, the real metaverse was Roblox, Fortnite, Minecraft. I mean, if there's anybody over the age of like 40, you probably have kids playing it. And if you're under the age of 20, you're probably playing it, right? Like Roblox right now, I think does as much as like 85% of the hours people spend on Netflix, right? So and the graph is going like this. And so at this end, virtual reality. So I said there is a real metaverse, but it looks nothing like what everybody's talking about. And so I need a different fund because I do think that's going to be big because we're going to have more time on our hands and more capital to deploy. And every social medium has always been started by the younger generation. Like I was the first member of my family on Facebook. I was the first member of my family on Instagram. By now, my grandma's on both, right? And so then it stands to reason that is there a chance that you and I will be on Roblox in 10 years? Maybe, right? So essentially, I set up a fund where it can be any asset class because back then it was so unclear. I said like I could do equity. I can save SAFTs. I could do tokens. I could do startup equity, NFTs, anything. We ended up pretty much not doing any NFTs because I was bearish on them. I would talk poorly about what's called virtual land because I said it makes no sense to charge a young developer that wants to build something in your world $50,000 for a plot of land. It's just bad network effect economics, right? And so long story short, we incorporated the fund, and fund one was very much focused on that thesis, right? Like UGC, like games and virtual reality.
Got it.
And through that fund, we backed, because virtual reality was so underfunded and underloved, we were able to literally back some of the best founders in that space where it's, when I say the best, like everybody says that they're best founders, but what I'm talking about is more so the kind of companies that have monopolies on their specific sectors. Like for example, there's a company called ShapesXR, and they pretty much have the monopoly on like spatial design, right? Or spatial analytics, right? And of course I can say with the word monopoly because it's way too small of a space for anybody to care, right? Or like spatial analytics, spatial design, spatial video capture, right? Where like 80% plus of the industry uses them,
these products.
right?
Yeah.
And so I'm like, in the event that we get like, if there's linear lift for VR, these companies will still do well in a fund like ours can probably still return at 3-4x. If there does come tailwinds where like we go from 40 million headsets to 100 million headsets, right? That's how you can actually be a top percentile fund and have a 10x plus, right?
It's interesting around timing. You mentioned headsets. One thing that I've always talked about in terms of VR is that the hardware technology was not at a point where it's caught up to the software technology. I think we are at that point now where it has caught up. What's your thoughts on that?
I think we're almost right there. So like one of the biggest unlock because you can see this in distribution numbers was the Quest 2, which was really the first good standalone headset. Because in the past you always need a computer to plug cables in and so forth, which means you need a $500. No, sorry, not 500. Yes, 500. Yeah, I'm comparing like. No, $5,000. Yeah,
$5,000.
$5,000. Yeah, I was like, yeah. I was trying to compare PC versus Mac. No, but like it's like a $5,000 gaming computer plus $1,000 Valve Index, and so now you're $6,000 deep. And like, how many kids can afford that? And you still plugged up. You need a lot of moving space and whatnot. So it just wasn't the right market. Plus, it's to get a session started. There's friction, right? Quest 2, essentially, you just plop it on. No computer, no cables, no strings. Good enough games. First AAA games, and it works. And that device sold like 25 million units, which is more like the Nintendo 64, which like we still think about today, right? Like it's actually one of the top, I think, 20 best-selling consoles of all time, right? Now we're getting, now we've been improving things like, field of view and mixed reality and like small fine-tuned things. To me, the real breakthrough next is actual size. Like it matters. Like we got to have essentially less weight, less clunkiness, less size. And the place where you start seeing this actually breakthrough, where you're like, we're now ready, to me, is smart classes.
And I know we've talked about this, but an investment that you're super excited in, the new fund, is call it leader in the smart glasses space.
Yes. Yeah. Yep.
What's the company called?
Mentra.
Yeah, it's amazing. I mean, and you told me it's because the weight of the glasses, it's the first time that the weight has been under a specific
40 grams.
And that's like the mecca, right? To be under this 40 grams.
Yep. So to connect the whole macro story real quick, so that was fund one. With fund two, essentially, because we've spent so much time XR and talked about this very question and problem, we realized, you know what, for the next fund, like I'm very bullish on VR investments, but in terms of timing, smart class are probably even close. And then the more time I spend with smart class, I realized smart class are not even about entertainment, they're about human augmentation. How do we make people smarter, faster, better? Because now you've got an AI co-pilot traveling with you all the time. So to this specific company, Mentra, they're doing two things. One, they're building an operating system for smart glasses because Meta is a closed ecosystem. If you're a developer, you can't even build on the Meta Ray-Bans if you wanted to. And we've got some of the top VR teams in Fund 1. They're asking them, they want to, and they're like, soon, TM, right? And it's like, it's eventually, and like, we'll give you SDK. You're the first on the list to get SDK, but like, they chose not to. I'm on the other hand, I'm a customer. I've bought the Meta displays. I spent $800 on them, right? And there's very little to do.
Yeah.
So I've seen Meta intimately enough to know that they have a lot of issues. So far as to say that I tweeted about potentially shorting Meta, and that led to Boz, the CTO, blocking me on Twitter. So like I'm very familiar with Meta. And that makes me so much more bullish on a Mentra, for example, because I see like they're making all the right choices that Meta isn't making. So what they're choosing, for example, is, okay, we're going to make it an open operating system. So anybody can build on our platform. It's open source. And we don't even force on our own hardware. So if there's other hardware makers like Even Realities, Music, and so forth, they can all install Mentor OS. So now, no matter what glass you want to buy, you can install the operating system. And so that's great.
It's an infrastructure play.
Yeah, it's infrastructure play. But at the same time, they also say like, well, we're not going to play chicken with the egg, like for somebody to make the right glasses. We're going to make the right glass ourselves too, right? And so to that point, there's a few tipping points when it came to smart glasses. You mentioned the weight. There's been studies of like, when did human actual glasses take off? It was pretty much the moment we got it under 40 grams, because anything above 40 grams can give headaches because there's too much weight on the nose. It hurts.
Right? Yeah.
It hurts to wait all day long. Yeah. Battery life, quality of micro LEDs, and so forth. So like, yeah, my thesis is smart glasses is the major years going to be in the next 24 months.
It's killer.
And then VR is going to happen too, because they're interrelated. Those two worlds will merge eventually.
All right, so you were early in the crypto world.
Yep.
You were early in the VR world.
Yep.
Now I would say you're early in the connected, the next gen of connected devices and frontier technology, the term that you used before we started the pod here. How do you think about what's next, and how do you think about the cutting edge compared to the bleeding edge? Because you're really on the bleeding edge. I mean, most investors in venture are cutting edge. Yep. You're bleeding edge. And when you think about risk and you think about investing in venture capital, you need adoption from a market standpoint, right? And you are maybe a decade sometimes before adoption. How do you think about these types of investments and market adoption, and even more so de-risking some of these investments because they're so early?
So the thing that drives everything in venture, which people often talk about, is a power law, right? Like that a few companies can return so much that they return the entire fund, and that the right tail can be virtually infinite. So like, and then you have to ask yourself, well, what were the companies that delivered on that in the last decade or two? Almost, when you look at 3 companies stand out that have defined most vintages, which were companies like Facebook, Coinbase, Uber. Like you look at most big funds, and like those were like some of the home runs that they talk about, that they list as like really being fund delivers. And all of them were non-consensus at the time they were being built, right? And so I think that's an important starting point. So you need to have the highest surface area for having the power law work out in your favor, right? Like you should be making as many shots on goal as possible on the kind of categories that have a high enough probability of having a major breakout in those next 3 to 5 years, right? Now, the benefit of that is that number one, if any of those categories have a tailwind, right, they can accelerate much, much faster, and they'll have the experience that crypto had in 21 or AI has right now, right? 2, by backing these categories early, you're getting to them at a time when they are just chronically underfunded, and they only attract missionaries. Because guess what? Like, who wants to build in VR right now? Yeah. It's only the people that like just genuinely live and breathe for VR. Yep. They've probably been in this industry for 10 years. And if they go through another 5 years of bear market, they will wiggle their way through.
They will continue to go through.
So like, it's probably, the truth is, it's probably not even going to be right up for you. They're just going to like size down. And then when VR finally hits, they're probably still going to be there.
And do you feel like too, since you're doing this, you're making a name for yourself in the space, right?
Absolutely.
There's only so many people investing in the space.
For sure. Yeah. And even like, in crypto, it led to very quickly like being on like the biggest podcasts, like Palm Podcast and so forth, and all the magazines, the Cointelegraph, I think it was, CoinDesk, like top 100, whatever it was. And in VR, like right now, like even one of my analysts, JP, He was flown out to Japan to give a talk on VR to some of the CVCs over there. That's the second time doing it this year, right? It's like even our team is becoming so recognized now in these emerging spaces. And the same thing we're actually now doing in brain-computer interfaces, where we've now backed 3 companies, Paradromics, Neurobol, Numa. They do everything from brain chips to EEG, like measuring like brain states, to subvocal communication, where I would argue in the last 12 months, there's probably 0 to very few funds in the world that has done more BCI deals than us. And so like, one by one, we're capturing these spaces. We get the smartest founders, which then becomes an opportunity set of itself where the smartest founders refer the other. If there's anybody new coming to the space, they'll say, oh, you should take a look at this one. And if I got 3 of the smartest founders in BCI and 2 of them say, look at this founder, well, that's very, very high signal. And yeah.
I was just saying, how do you think about diligencing these companies? Because they are so early. It is frontier technology. You can't look at your traditional, call it traction in terms of revenue or sales. How do you diligence these companies?
One really, really big one is, as much as possible, is being a super user.
Got it. So really diving in with these products deep.
Correct.
And I saw you have about 50 to 100 products in your living room.
Yes, correct. Because it's the easiest way to tell the smoke and mirrors, right? Like, somebody can have a beautiful deck. Somebody can say, oh, I'm ex-Tesla, I'm ex-this, I went to good school, but they still don't deliver anything. Now, on the flip side, if I see, hey, if I could just, like, I'm like, let's do a demo. Let me jump in the product. Let me try it out. And I'm like, if I had an exceptional experience, I'm like, nobody's been ever able to replicate this. And I can tell the kind of like love and skills and thought that the founder puts into it. And also when we have these discussions of how they're going to iterate it, I can see how much they've thought about the future. That is a lot more helpful. So for example, with Mentra, like I actually bought the even realities. I tried out their operating system. I tried out like the translation lab when I was in Japan. I was trying out the AI system where like I was watching Bloomberg and I had listened to it and like it gave me other facts of the things that we'll talk about. Very recently we did a deal called Orchid, which is essentially sequencing and editing embryos, right?
Wow.
Well, Orchid
live embryos.
Well, Orchid has sequenced 6 of my embryos.
It's crazy.
So I was using So I was a user first.
Yeah.
And I was like, this is an incredible company. Because I was looking at Nucleus, I was looking at Orchid, I was looking at many of them. Nucleus went through like Twitter hell recently, and I can say like I thought the founder was a douchebag. Like I talked to him. I talked to him over email. His sales team didn't even follow up with us, so they lost out a sale. Like we were.
Did they know that you were an investor, or were you just posing as a customer?
Both. So we came in as a customer. Then I said I would also like to angel.
101.
Yeah.
It's like business 101.
And on the other hand, Orchid was just like incredible customer service, and I didn't even bring up investing way later. So like just great customer service as a customer. And in fact, then I was like, I love this product so much. And I think this is awesome economics because it's expensive. It's like $2,500 per embryo that you test. So like I think we spent like $30,000 on them. And I'm like, this is a great business that totally scales because if you do the math, like, okay, does it make sense to spend, if you have the money, $30,000 on making sure you have the healthiest child when you're going to spend, per statistics, on average, 6 figures on a child, and that's average. High net worth would be $1 million plus.
And if there is something, God forbid, wrong with that
correct.
that number is 10x.
Correct. Absolutely.
Well, it's interesting too because we looked at Neurable. You know that we looked at that opportunity. And it's not in our wheelhouse.
Yep.
Hoping it comes back around, but we got the headset and we tried it out. I think that a lot of people in our industry in venture, they never try the products that they invest in.
Yes.
Specifically on the software side, I really do believe. I mean, you can demo and use all of these products if it's post MVP type product. I think a lot of VCs just take the word of the founder, the school of the founder, whatever it might be. And
I've shockingly seen this, like even in VR, sometimes I'm on cap tables with people where they then find out they don't even own a headset, right? So like, how are we able to underwrite a deal if you've never stepped in? Like, so for example, with VR, we backed in Fund One, we backed a lot of games. Whatever we would actually do is like we'd spend hours inside that game, not just us playing, like saying, oh, we like it. No, I would talk to the other kids I'm on the server with. So I would be like on a server with like a 12-year-old and like, so like, oh, you've been playing this game and you like it? How's it compared to this game? And like then like I have this.
That's
screechy,
a diligence hack right there.
Yeah,
that's
the screechy voices tell me whether Digigods is better than Yeeps and whatnot.
Oh, that's amazing.
Yeah.
Super interesting. So the current fund is Fund 2 or 3?
Fund 2.
Fund 2.
Yep.
Actively fundraising, correct?
Actively fundraising, actively deploying. Got the first 12 companies in already.
Good. And I will tell the audience, if anybody's interested in this space, this is the guy. I mean, he is amazing at this space. He's all over it. And the word frontier technology is synonymous with your name. What are you excited for in this fund? Obviously, we've got a lot on the wearables, the connected device side. We've got potential companies like Neuralink that competitors to Neuralink.
Yeah, Paradromics. Yeah.
Yep. What are you excited about that we haven't talked about today that the audience might not even know exists in the world at this point?
I think because we just mentioned Orchid, we just mentioned Mentra. One we haven't mentioned, so because you heard about Paradromics Neuralink, right?
Yep.
Which is brain chips, which is highly invasive.
Highly
invasive, right? Because you need brain surgery essentially to do it. But in exchange, you can pretty much send up to, with Paradromics, 200 bits per second to a computer, which means you can actually engage with technology, right? But the thing is, the initial customer base, it's not turning you into cyborg. It's more so about like helping people with speech disorders, helping people with getting people to see again, hear again. Like all these things can actually be done, right? Something that is much more applicable to the general user, for example, is a company called Numa. So Numa does subvocal communication. So essentially, imagine having an AirPod that actually allows you to talk to your devices. So if you want to, let's say, use a Copilot to take notes, right? So you talk to, most people talk to AI now. They talk to the wearables, the smart glasses. The problem is a lot of us we don't want to talk out loud when we're in public settings, or even in your office, everybody talks over each other. So being able to essentially use telepathy to talk to your devices, you pretty much don't have to move your mouth, and it's able to pick up what you're saying.
What you're saying or what you're thinking?
So it's a mix of both, right? So when we say subvocal communication, it might be akin to a whisper or you mouthing it, but very minimally, because the muscles in your mouth are still moving, even if you're not opening your mouth, even if you're not making a sound, right? And so what it can do, there's so many approaches to it, from EMG, which measures the electromagnetic outputs of your muscles,
Yep.
to somehow trying to measure the vibrations of your jaw. To there's all kinds of different approaches to it, but essentially the idea is that all of a sudden, let's say you're in a coffee shop, instead of you typing, which a lot of times talking is faster and also it's more seamless, you can now just talk to your AI agent like this,
Yeah.
And so that was really cool. Really incredible smart guy.
Watch the video on that, by the way, because he didn't just speak, but he did.
Yeah. Well, the funny thing is, there's a cool side story to that one. Until this investment, I've never invested into a founder that reached out cold, as bad as it sounds.
I don't think I've ever invested in a founder that reached out cold. Please keep on reaching out because I want to, but go back to your story.
Yeah. And the funny thing is, I do open every single email, but it just somehow happened. I don't know if it's the signal or if it's just the quality. I don't know what it is, but that's just what the stats say.
Yep.
This was the first time where he emailed me, and I think actually I forwarded to Neurable, and I was like, what do you guys think about this? And they were like, I don't know about this. They're probably not going to make it. And I was like, whatever. I'm still going to meet the guy. So I went to New York. I went to his office, and I was just I'm really impressed. I was like, this is really smart guy. They literally had a defumigator in one of the bedrooms where they were building hardware, a hardcore lab, and just four guys working together, with desks against each other, out of a small apartment, on Times Square. And guy has been a transhumanist like me for his whole life, reading Ray Kurzweil and reading all the leaders of how can humans augment themselves and transcend and whatnot. I'm really cool. And so I've been tracking him for 4 months, 5 months, and he finally got around together. And he had some really incredible VCs, Alex Ohanian from 776 led the round, Naval Ravikant participated. We came in, and that's one of those where I'm right now he's building subvocal communication, but really he wants to redefine how we engage with computing, right? And so I think companies like that are also just super incredible, where, to your point, yes, it is further out on the spectrum, but I think the best founders also have still a business brain to be realistic and say, okay, how do we pursue this 10-year vision, but still build a business in that process? And so, for example, with the subvocal communication aspect, he already knows, okay, he's going to sell this B2B, not B2C. He's going to sell it to like big finance companies, big tech companies, because they've got whole floors where people sit next to each other, and all of them are using like voice for cursor, for example, right? And so now he can sell them in huge batches, right? And then go towards the consumer, because the consumer, like it's also much easier to wear a device that might look somewhat geeky inside like a cubicle versus you're out on the street, right? And this, I think the same is true even for like a Mentor with the smart glasses. They are now also selling to enterprise, but saying like, hey, we're selling these to like warehouses where the people doing inventory are going to wear them, and it real time scans the environments and sees like what's missing, what needs to be moved. It gives you a plan of where to move, where to walk, what to pick, right? Like your to-do lists are on your screen, right? Versus saying like this is going to be the new social thing, right? So I think taking the right order of things is equally important.
Yeah, no, it's super interesting. We're on the bleeding edge.
Yep.
You're on the bleeding edge. You're in the state of Florida. Talk about how this state has been able to support your firm, not from an economic standpoint, but just you living here, you being a huge fan of Florida, coming from Germany, or has it not? Have you had to go to New York and SF? What's that like down here? Because most people don't think of Florida specifically as the bleeding edge ecosystem.
Yeah.
There's a great business ecosystem and a great technology ecosystem, but a lot of what you're talking about, at least from my purview, doesn't exist in this state.
Yes, you're right. I moved here in 2021, which was during COVID. And at the time, I was still in LA. And in LA, I remember having a meeting with another fund manager who lived 5 minutes from me. And we had a Zoom call. Because of COVID restrictions, we're like, oh, I guess we're not going to meet in person. So then I was like, why am I living in LA if I'm not even meeting in person with the person living 5 minutes from me? And of course, throwing things like tax and whatnot. But like I moved to Florida, and at the time, it was a hotspot, right? I think 2021, 2022 was like a prime time where like, Founders Fund came here, lots of crypto. I mean, I anywhere in Brickell, like I could walk for 2 minutes and I could meet with some of the executives at many crypto companies. So it was incredible at that point. Unfortunately, it's been bleeding out a little bit since then. I think the tech has been bleeding out. The old time finance has been coming in, like, Thoma Bravo, Citadel, and so forth.
Institutional finance,
right? But that doesn't overlap that much with me.
No.
I think Florida is good for capital raising in the sense that you have everyone's come here, right? So for example, let's say this week is out Basel, right? Everybody's here. So no matter what state somebody is from in my LP base, odds are 30% of them might be visiting right now. So it's easy to entertain them, meet them, and so forth. That being said, I've already been spending half the year out on the West Coast now. So me and my girlfriend, we live in LA. And so we do, I think I was in SF 16 times the last 3 months. Yeah. Just because I think of our deal count, SF Bay Area comes in the highest. If you add in LA, California is obviously, then we've got some New York. We actually do quite a bit of Europe. I think Europe is an underpriced space where there's some really smart founders coming, especially out of countries you wouldn't think of, like Poland, for example. We've backed 2 Polish founders. One of them
great developers too.
Yeah, really great developers, and also very hardworking ethics in like the Eastern European bloc, especially. They don't have the social welfare problems that like a France would, where they tend to be like, we recently backed French founders, but they're like, we're getting the hell out of France. Where they already moved to, like, one moved to London, one is moving to SF because they said like, France is too soft, right? So I think with Florida, it's not that we don't have the issues that like Central Europe has, which would be like, France, Germany, that people are soft in a way, which I can see as a German. But I think we have the issue of lack of developer talent, right?
Which has always been the major issue. I mean, it comes down to that. I think from my purview and what I see, the universities are trying to do something different there because they have to. They absolutely have to. I mean, I'm a huge believer, and we're huge believers in the state of Florida, but, as most of our audience knows, we're now FLF. We now, and have for give or take the past 7 years, invest all over the country because it's very hard outside of Silicon Valley to only invest in one ecosystem. It's going to be very challenging. Even if you do the best deals, there's only so many best deals in secondary and tertiary ecosystems. But I will tell you, we need people like you to stay here, and we need more people like you to move down here because what you're doing is truly game-changing work.
I appreciate that. Yeah, and I think there's a lot of companies where location probably doesn't matter, right? And for them, it might be better to like have a better time zone, for example, to be in Florida. Totally. I can't say that Miami is cheaper than LA anymore.
No, it's actually quite
expensive. It's gotten quite expensive, but like there are advantages, right? But that being said, to your point, our most important job is like how do you get into the best companies possible? And I think the truth is like, so it seems like there's only two camps. The one is like, oh, we don't need SF. We'll just back all the deals everywhere else. And then there's the other camp, which is like, we'll only back deals in SF. And I think both are missing out because, to the point, like, yes, the largest percentage probably comes out of like the Bay Area. So like, if you completely cut that out, you're cutting yourself short. On the flip side, the deals not coming out of SF are probably also way better priced. Like, I'm able to get into like $5 million pre-seed rounds several times now. It
does not exist.
Pretty much doesn't exist.
Yeah, and that's the same conundrum that we always run into. It's like, you have the top quality companies in California, but I always say, why am I seeing a company? There has to be a reason that I'm seeing that company because, I'm not boots on the ground in California. Typically, it would come from a friend. It would come from another firm. That is great. But if it's cold coming to us, coming across my desk, there's probably a reason why I'm seeing it. It's been passed on by 10 to 20 people. Felix, this has been amazing. Appreciate you more than anything. If anybody wants to connect with Felix, what's the best way to connect?
I would say email felix@hartmanncapital.com. Of course, also like social medias, like Twitter, Felix or Hartmann, right? I think Twitter, email, those two will cover it, and also like our websites to learn more.
Love it. If you enjoyed the pod today, do us a favor, follow us, throw us a like, share on Instagram. We appreciate everything. For the people in Miami this week, enjoy Art Basel.
Amazing. Thanks, man.
Appreciate you.